is it still a wild card? Are all bets off? I mean, we know this year we're getting this economic recovery. We know we're getting the stimulus and the effects of that in the market as well. Next year, potentially tax hikes, maybe more regulation. What does that do to the market?
Well, so I think that is the million-dollar question more than anything else. I think this year there's just no way for growth to slow down, and rates probably go up. And what the Fed and the markets are to worry about is how things will play out perhaps in 2022, and more importantly, in the second half of 2022. Once the stimulus passes and all these contractionary policies come into the market, 2022 is going to be very, very different than 2021. All of these effects that are tailwinds today will basically become headwinds in 2022. And to some extent, I think the bond market will probably see through it. So I think that sort of, in a way, caps how much the long rates can go, especially with the front end anchor. That is how steep can the yield curve be? And I think that is going to be a limiting factor in terms of 10-year rates. The bottom line is 2021 is going to be superlative. 2022 is going to be a very different ballgame. And I think that's what the equity investors and that's what the Fed ought to be focused on, not 2021 that much.
Gabriela, we're hearing increasingly more about this idea of a synchronized global recovery. I mean, certainly the U.S. seems to be spearheading the economic growth, or that's the expectation this year as we roll out vaccines so quickly and get shots into people's arms so quickly. Are there still opportunities to be had in the U.S., or should an investor start to look abroad for maybe some more meaningful plays for at least through the end of this year?
We really believe that investing internationally is actually a really important piece of dialing up the cyclicality in portfolios. International markets, especially Europe, Japan, they're a lot more cyclical than U.S. markets, over 55% in cyclical sectors. And we really believe that the global synchronized recovery is delayed, not derailed. I mean, Europe is, let's call it 3-4 months behind the U.S. in vaccinations and reopenings, but it's coming. And if you're a long-term investor, it's worth making the positioning change now for what's to come in the quarters ahead. So we would be overweight international versus the U.S., especially Europe, Japan, and with a bit more selectivity within emerging markets. And what we find is actually clients are absolutely not positioned for that. There's still the need to double the international exposure given the U.S. outperformance over the past decade.
Shepard Smith here. Thanks for watching CNBC on YouTube.